Yeah. Uh, Good evening, everyone. Myself, Sri Hardik Bawa. So welcome all to the today's topic on the internal audit for the management accounting. So we have our learned speaker, Mrs. Harsha Ramnani, with us. She is a fellow member of the Institute of Chartered Accountants of India. She has done her DISA, that is Diploma in System Audit, and she's also a commerce graduate from Jaipur and was scoring the rank number one. She is also a registered valuer for securities and financial assets, a class certification. She has also done a forensic accounting and a fraud detection course. She has done a course on concurrent audit of banks, of India's, of business responsibility and sustainability reporting, and also a public finance and government accounting by ICI. She has cleared the social auditor exam. She was the first one to clear in Rajasthan and amongst the top 10 in India. With more than 12 years of experience of handling auditing and across various industries, including textile, real estate, automobile, component, shipping, healthcare, banking, telecom, and other sectors. Her areas of expertise include statutory audits, financial and internal audits, operational audits, performance audits, and valuation advisory. She is also an expert in due diligence, ESG reporting, impact assessment for Ind AS, conversion of financials for corporate as well as non-corporate entities. She is also a facilitator of World Bank project funded by the government of Rajasthan. She is an instrumental in preparing the background material for public sector undertakings, listed companies, and large-scale private companies to aid them in facilitating smooth implementation in areas of Ind AS, internal controls, SOP management, ESG project implementation, and enterprise risk management. She is also an author of two technical guides. First, the technical guide on how to perform an internal audit in textile industry, and a technical guide on Rajasthan VAT, published by the respective committees of ICI. She is also authored background material on ESG and BRSR reporting by SRSB of ICI. She has authored various articles and newsletters, which is published by the regional bodies of the ICI. She is also a regular faculty for evaluation courses, BSR, SR courses, and social audit courses. With this, I would like to now hand over to Harsha ma'am for her session. Again, looking forward for a very knowledgeful and learning session. All over to you, ma'am.
Yeah. Thank you so much, Hardik, and thank you so much, Internal Audit Standard Board, for giving me this opportunity. I hope my voice is clear and audible. And
Yeah, it's audible.
thank you. So today's topic is very much interested, and coincidentally, this is being planned on the June 5th, which is World Environmental Day. And here we are talking about internal audit of non-financial statement, where the environmental impact and the social impact is the most important criteria to test. So, whenever normally we have sessions or we have discussions on the BRSR reporting or ESG reporting, it is normally being asked how to implement the same, why it is important, what is the significance of all these areas. Yesterday only, I was having one meeting with NBFC very specifically, where they were asking why it is important for us. So ESG is having a importance in each and every aspect of the business, irrespective of the industry where we are working, whether it is manufacturing, service, or any other particular industry. And when government has already mandated the BRSR report and ESG report, and there are other several regulations are also there. Now it's a high time to think about the internal audit function within a BRSR report, or exactly the proper terminology that we can use is for the non-financial reporting. So earlier, being a chartered accountant, we were always preferred partner for the financial reporting aspect, and we all are more or less somewhere being considered expert in the financial reporting. But now it's a time where now we are showing our expertise in the non-financial reporting aspect as well, which includes a business sense or re-engineering of the business, considering all regulatory updates and the need of the requirement. So to start with the session, I'll share my screen first. You can give me thumbs up whether my screen is visible or not. Yeah, okay, thank you. And do let me know how to take a question answer, whether the coordinators will share the questions, because I'm not able to see any Q&A box.
We will be sharing the question and answers at the end of the session.
Okay, fine. If you find any particular question important to address in between, you can just interrupt me and you can share the question. Okay.
Sure, we'll do that.
Yeah, thank you. So internal audit of non-financial reporting. When we are talking about this important subject, first we need to understand what is the meaning of ESG and why it is important. Why I kept first heading as a ESG importance, because more or less what I understand by interacting with various chartered accountants, now we understand what is the meaning of ESG exactly and why it is important to understand. Second, what is non-financial reporting? So this is something, again, a very common aspect, but first we need to understand that today what kind of the non-financial reporting we are going to discuss. Non-financial implementation and disclosures. So how it is important, how we can help in terms of the implementation part, how to make a disclosure. Then we will come on our specific topic of the day, which is internal audit of non-financial information. What kind of the opportunities exactly are waiting for us? This is something very new, where as a chartered accountant, where as a professional, we can explore our interest, where in past we were having certain interest in a control testing, internal control or internal audit part. Integrated reporting is having a significance when we are talking about internal audit of non-financial information. So that we will discuss. What are the board responsibilities, how it is important, and last, what kind of the key questions that we can ask for the internal audit of non-financial information. So the first slide is for everyone with respect to the sustainable development goals. So as probably we all of know that there are total 17 sustainable development goals for which every country is now trying to achieve a certain target. So if I talk about UN nations, their target is 2030 to achieve these 17 goals. For European nations, their target is 2050. And for India, the target is 2070. Many times we discuss that when the target is 2070, which is still having, approximately 40 years or 45 years of time, why we are concerned right now? So the reason is that from today onwards, if we have not started working for implementation of these targets, it will be very difficult to achieve the targets by 2070. And the common example for all of us is the UN nations, because they have not taken this target seriously. And when the deadline is very near to them, that is 2030, it is kind of impossible situation that we are seeing, that for them, it is something non-achievable for 2030, and probably they will, increase, or they will, postpone their target, that now our revised target is 2050 or 40 or 2050. So when we see all these 17 sustainable development goals, there are specific 2 core goals that is being required to achieve by any organization, which is goal number 8 and 13. Then we have an immediate connection, which is having 4 goals, which is immediately connected with goal 2, which is 8 and 13. After that immediate connection, a critical linkage is there to achieve that immediate action or a connection. So that critical linkage we need to understand and we need to work on that. For example, if we see one part in terms of critical linkage, it is quality education. So this quality education target is something which is critical linkage with respect to no poverty, which is an immediate connection. Because if we have a good education, if we have a quality education, we will be, more in good situation to survive ourselves by earning our, lifestyle, or by earning our cost of living. And by that, we can achieve the core target, which is somewhere, prosperity, if I talk about the growth in a future or economic growth in a future. For all these requirement, immediate action, critical linkage, there is a wider foundation where we need to start working upon. And in that wider foundation, you can see goal number 15, which is life on the land, for which the today's day we are celebrating. So I belongs to Jaipur, and in Jaipur, approximately temperature, if I talk about these days, it is ranging between 45 to 48 or sometimes 49. However, we have not touched exactly the 50-degree, but we are very near to touch upon that. And if temperature will rise on this speed, when the temperature is 57 or 58, it is very difficult for the human to survive. And when a human survival is on a question mark, then economic growth, business growth, everything is certain, not relevant for us, because if we are not surviving, that for whom business will run or whom the startups we can think on a future part. So that is the reason these sustainable goals are important for us. And integration of these sustainable goals in a business practice is the most important priority right now. Slide will give us insight why ESG is important. So reason why ESG is important, that now when we are talking about business, government will only support to those business which is ESG compliant. Government will only support to those business who are taking care of the ESG part. If somewhere your business is impacting environment negatively, or your business impacting social aspect negatively, it will not be considered a good business by the government, and certain negative penalties or certain negative aspect we can face in a future. In a previous few years, because of the globalization, because of making our boundaries more wider, where MNC culture we have seen in past, it is being seen that businesses somewhere started impacting environment negatively and a social aspect negatively. Like if I talk about MNC culture, so because of the MNC culture, now the time zone is being considered an irrelevant aspect, and people want 24/7 business. So they work 10 to 6 or 10 to 7 with their own country's people, and they prefer to work rest of the time with the other country people, where their business can run 24/7, which is practically not a correct practice. And we need to think about human being, that how and what we are expecting from them. Similar to the environmental aspect, when we are talking about industrial aspect or an industry establishment, industry establishment should be there, but not on a cost of environmental aspect. If your industry establishment impacting the environment negatively, this business will not be promoted in future by the government, and it will see the negative impact from the government agency or a regulatory agency side. So because of all these aspects, we have seen few ESG transformation in the corporate landscape. And what kind of the corporate landscape, how it is being changed. So first of all, for the first important criteria that we have seen in a boardroom is a board is talking more about ESG aspect. I am sure the people who are attending this webinar and who are sitting on various boards or somewhere attending the board meetings in a different capacity, you have experienced that now every quarter or in every meeting, board is regularly talking about the ESG implementation, and they are asking company official how they are working for a ESG implementation. And the reason being why they are asking all these things, or why they are more talking about the ESG implementation. First important aspect, climate change, and that impact already being experienced by many of the industries, where uneven environment like floods, or maybe the high temperature, or many times during rainy season, the heavy rain, it is impacting business very negatively. So that climate change financial risk needs to be addressed, and that is the reason board is regularly talking about ESG compliance and ESG impact on the business. Second important aspect is access to the capital. So now if you want a capital for your business, irrespective from which particular source you are expecting the same, it can be a financial institution, it can be a venture capital fund, it can be a private institutions or private investors. Everywhere these institutions who are providing capital to run a business, they specifically asking about the ESG compliance. And the reason why they are asking about ESG compliance, they are far better or far ahead from us in terms of understanding the regulatory compliances or a regulatory development. They understand that if business will not consider or not think about ESG right now, after 10 years, it is difficult for them to survive in a market, or it is difficult to them in survive in an industry. When survival of the company is on question mark because of non-compliance of ESG, obviously, investor, banking institution, financial institution first will ask you for the ESG compliance, because if that is in place, it means somewhere you have good plan for 20, 25 years or 30 years to run that business. On the other front, regulatory development is also there, where BRSR reporting, I hope everyone is aware about that. Full form of BRSR is Business Responsibility Sustainability Reporting. And this BRSR report is at present mandatory for top 1,000 listed companies, and assurance also being started from current year for top 150 companies, where for financial year 23-24, we will see top, first 150 companies with reasonable assurance of their non-financial reporting. And how it is important and it is connected with internal audit, that we will discuss in an upcoming slide. With respect to reporting standard, so currently this is something, an area where we need to work very hard, because if I talk about any reporting standard available in India for non-financial reporting, the answer is no. No Indian standard is available. Recently, IFRS has issued two standards, which is S1 and S2, which giving guidance that how we need to prepare our non-financial reporting, what is the proper framework or formats that we need to use. The BRSR format, GRI, TCFD, IR, or maybe any other global reporting framework, if we talk about, these are reporting framework. It is not a standard. They are giving us a format that this is how we need to report, what we need to report, and how we will make sure the authenticity of the data that we are reporting in these framework. For that, something reporting standard is required, where we only have right now S1 and S2 from IFRS. Respective country standard or an Indian citizen, Indian standard, we don't have any kind of that standard. Stakeholder pressure. So this is something again important aspect, where all the stakeholders, whether it is a regulatory department, whether it is vendor, whether it is customer, or maybe someone else, they are regularly having a pressure in terms of ESG performance and a transparency. Now the important point is here the financial impact. Here we are talking about again and again for non-financial reporting, and there is a one pointer where we are going to discuss about financial impact. Can we have a financial impact of non-financial reporting? I hope we understand the terminology non-financial reporting, which means we are not talking about financial numbers. We are not talking about revenue, profit, or any other cost element. We are talking about environmental, social impact by running a business. So will it be there any particular financial impact? Answer is yes. If you are not following the ESG compliances, if you are not thinking about ESG integration within your business, regulatory compliance is one part, where few penalties we will see in future. Right now, there is no penalty, there is no charges. But the important aspect is you will lose your business if you will not follow the ESG. From Europe side, you will not get any contract, any agreement, or any business if you are not following ESG. From UN nation sides, there is complete no if you are not following ESG. And similarly, other countries are also making rules that whom we should consider for the business, how to check their ESG compliance. In India also, when we are talking about BRSR reporting, so from next year onwards, top 250 companies needs to ensure that their supply chain management, their vendor managements are also ESG compliant. If they are not compliant, then they need to explain that what is the reason they are not having a compliance for the same. And that is only for the next year. After that, that means 25, 26, there is no option of explain. So for the first year, they have given the option explain or comply. Either you comply or give an explanation why you have not made a compliance. From after that, next year, there is no option to explain. It is a mandate to do a compliance. If the supply chain management is not having a compliance of ESG parameters, for them, it will be very difficult to get a business from all these listed companies. So the currently you, me, or maybe anyone else can say that, okay, for us, getting a business from a Reliance is difficult, getting a business from the Adani is difficult, getting a business from the Tata company is difficult, being a consulting or any other business. But from their supply chain, from their vendors, is it difficult for us to get a business? Answer is no. Their supply chain clients, their vendor management clients, all these clients, we are taking care in terms of their compliances. And this is something new, which now we need to make them educate that if you want to continue your business with all these 150 companies, this ESG compliance is mandatory for you. Otherwise, whatever the business you are having with these companies, for say 10 CR, 20 CR or 30 CR, whatever the number they are having, that 10 CR or a 30 CR business they will lose. Last one is about talent. So this is something we need to work upon, because now we need to think that how ESG part we need to incorporate in ourselves, where we are equipped with the required knowledge, equipped with the required understanding, how to integrate the same in a business. And currently it is a challenge where the talent, if I talk about, we have a good enough talent from a CA fraternity who understand the financial statement, but somewhere we need to work upon more to understand the non-financial parameters and how it can impact our business. Hardik, Charvik, if there is any query, so you can let me know.
As of now, there are no queries. We'll just let you know whenever they come.
Okay, no problem. So now we'll understand first that what exactly is the non-financial reporting, because I understand I have used this terminology again and again in my previous 3-4 slides. So when I'm talking about non-financial reporting, it is something which refers to the disclosure of the information which goes beyond financial performance, which means your revenue and net profit, EBITDA, or whatever the number. As a chartered accountant, we are very much familiar, and giving us more insight about environmental impact, social responsibility, and governance practice. The governance aspect is already being taken care by the business as well as the chartered accountant fraternity earlier as well. We always promote a good corporate governance practices. Whereas now we need to think and we need to act more on environmental impact and a social responsibility part. By having a non-financial reporting with our financial reporting aspect, as a company, we are providing all the stakeholders a holistic view of the organization activities, which includes our sustainability efforts and ethical practice. Also, the non-financial reporting is being considered as a synonyms of sustainability reporting, triple bottom line reporting, and a CSR reporting, or maybe any other name if you want to give it. Like BRSR reporting is also a kind of non-financial reporting. CSR impact assessment that we do, it's again a type of non-financial reporting. Probably this triple bottom line reporting is a new terminology that you can see right now on a screen. So triple bottom line means with economic aspect, we need to also report environmental and a social aspect as well. Earlier, only one bottom line we were concerned, which was profit. Now with profit, we also need to think about environmental and a social aspect. What are the key components of the non-financial reporting? Most important component for the non-financial reporting is the environmental reporting, where as an organization, we need to give details about organization impact on the environment, including the GHG emission, which is greenhouse gas emission, energy consumption, water usage, waste management, biodiversity, and conservation. When I'm using the term GHG emission, many chartered accountants always find themselves difficult that how it is relevant for us and how being a chartered accountant, we can understand this technical terminology. So it is not a difficult one. There is a particular protocol. According to that, we need to calculate the emission part that you can always find out on a Google site. And they are having complete calculators with respect to that if this is a particular industry, how to calculate the emission. Based on that, we just need to do the simple accounting, not financial accounting, the carbon accounting, where as an organization, we see how much carbon footprint we have saved and how much carbon emission we contributed to the environment. Based on that accounting, we normally have a debit or credit balance. If you have a debit balance of carbon credits that you can sell on, you can trade on the market exchange, similar to like NSE and BSE we have. So for carbon trading also, we have a separate exchange, which is you can use for carbon trading purpose. Or if you are having a shortage of carbon credits, that means you are more on emission side and you are not saving more carbon footprint. So in that case, you need to buy a credit to compensate your carbon emission to make your organization as a carbon neutral. The social reporting aspect is where we included data on employees, demographic, turnover rates, training development programs, inclusion of the efforts and a workplace safety. So the recently this year's BRSR report format has been changed, and they have included one important area also as a reporting part, which is asking how many jobs you have created in a rural area, semi-urban area, or metropolitan cities. Normally, what we have seen in past that every organization wanted to explore or wanted to expand their business in a metropolitan area because in that areas they always get the resources to do the job. Whereas if I go on a rural area side or a semi-urban area side, they think that we need to give more trainings, we need to make more expansion. So they do not prefer to have their organization on a that particular city or area. So to make it more equal on all geographical basis, this clause has been added for the current year. And similarly, there are other different aspects as well, which the social reporting is talking about. For example, if you are having a plant area which is remote from the city, and obviously there are 200 families which are living with you just to run your business, how you are taking care of their families, how many facilities you are providing to their families, whether somewhere you are contributing in terms of good education for their kids or to have a good social life for their families. So all these aspects now are being included in the social reporting. Similarly, details on the product safety, quality standard, customer satisfaction. So this was also a part of earlier business practice as well, where we all understand that if my product is safe, the quality standards are high, so that we will be able to satisfy the customer need. But now the more emphasis is that we have seen many unethical practices also in past, where we are not giving an actual situation to the consumer or actual status of the product to the consumer, that what kind of the components or what kind of the ingredients are used for this particular product, or if it is an automobile, what is the safety parameters that we need to consider, or maybe any other aspect. So all these ethical marketing practices are now being on more focused. So the one term that we used in terms of the non-financial reporting is a greenwashing. That means I am not doing something, but still I am making it as a marketing tool. For example, there is no particular benefits that we are giving to our employees or staff. Is still on a social media platform or any other place, we are marketing the same that we are very good in terms of the social relationship with our employees and staff. So that we call it as a greenwashing. There is other term as well, which is a green marketing, where whatever the good part you are doing, that you can use for the marketing purpose. So the ethical marketing practices and green marketing practices are now being promoted more, and government is more stricter on the greenwashing part, which on a different aspect they are taking care of. Like for BRSR report, we all know that it is a disclosure. There was no attestation mandatory for the last year. However, there were few organizations which voluntarily come in a front, and they have obtained the reasonable limited assurance. What if they are not taking a limited assurance? Whatever the data they are using for their annual report, we will consider as a right picture. And that was the reason companies has not considered it seriously, and they were just considered it as a tick box exercise. and disclose whatever thing they find suitable to as a company. So there were many greenwashing area as well, where company was not doing something and they were producing like they have done something, blah blah blah, part X, part Y, part Z, or something which is not being achieved by them, but they are portraying for the same. So currently, last month only, NSE has issued a circular and the directive where they mentioned that we have reviewed all these top 1,000 companies report. There are certain contradiction statement or a statement which is not apparently looking right. We have observed from the BRSR report, and we request all the companies to make a right disclosure or to give a right response to the questions that has been asked in a BRSR. So this is the first stage where regulatory is only making us aware that they are reviewing our document. For next 2 years, again, they will see that they will again and again issue the directive. Assurance is already there. So now the responsibility is on an auditor side, where they will make sure that whatever the disclosure they are making a part of BRSR, it is whether true or correct or not. And apart from that, SEBI will also impose certain penalties. SEBI will also impose certain charges on the company who make their disclosure not in a right spirit. So the governance reporting is here very much important, where ethical practice from top side, tone at the top should be right. Because if my top management is on a right track, accordingly instructions will be given to the middle management and executive people who are actually working on the ground. So if my management wanted to work on the ESG aspect, automatically middle management will work on that part based on the instructions, and executive team will work on the execution aspect. So as an example, if I talk about how we see a non-financial report, so normally these type of reports includes how company has reduced a water usage, manufacturing process, how they are using a recycled material in their complete cycle of the production, and their commitment to the renewable energy sources in their facilities. So these are the few environmental aspects which you will find as a non-financial report part. In terms of social reporting, if I talk about, so it includes fair labor practice, where as a company you portray that we are giving wages more than the minimum wages act. It is not just as a compliance that we are promoting. It is something more that we want to promote. Their program to promote diversity and inclusion in the workplace. And when I am here talking about diversity and inclusion, it is not about male and female only. The female equation already being in place. Right now, every organization we can see a good participation from the female side. Now here we are talking about inclusion of the other gender as well. So it's not only about male-female equation, it is about other gender as well, to include them in a regular socializing, in a regular day-to-day practice, because they are not people who are not fit to do any particular job. The manufacturing job, your service industry job, they can do. And for that, their inclusion in the society is most important. Right now, they are not having a right education because of their gender issue. That is the reason they are not good fit for the industry. So here, first step we need to take as an industry, that how we will work on their education part, because once they have a good education, then they will be the right fit for the industry as well. And the last part is about governance, where we talk about corruption policy, bribery policy. So how we take care of that. Data Privacy Act, we already have. A similar question has been added in the BRSR as well, that how we are taking care of data breaches seriously. So all these aspects, a governance aspect, we need to work when we are talking about non-financial reporting. So this is complete a non-financial implementation and disclosure picture that you can see on screen right now. Probably now you will have a few questions in your mind that you can post in the question answer box, so that we can take these questions in between session. Thus, you can see here as a 1, 2, 3, which is a part of ESG implementation for any of the industry or a company, where first we talk about stakeholder engagement and a materiality analysis. For me, as an industry, it is important to understand that which particular topic is important for me. For example, if I talk about NBFC or any other particular industry, for them, environmental aspect is not material at all because they are not in manufacturing. They are not somewhere, more contributing in terms of waste generation or electricity consumption or water consumption. Whereas for them, a social aspect is most important aspect because they are heavily dependent on social human being or their human capital. Do you think that without human capital they can run the business? Answer is no. So for them, their material topic is their human resource or their human capital. Whereas if I go on a manufacturing side, for manufacturing companies based on their cycle and a process, somewhere issue can be a electricity consumption, somewhere issue can be a water consumption, somewhere a issue can be any other natural resources consumption which are in limited, in nature, and maybe somewhere the issue is waste generation. So if glass industry we take as an example, for glass industry, electricity consumption is not a bigger issue. For them, bigger issue is their water consumption as well as the sludge what they are generating from their process. So when the glass process, they always have a water in a process which is used to make a glass surface equal and to process that in an equal manner. On a similar time, on a similar point, when we are making a surface equal or even, so in that part certain sludge is being produced, a waste it is being produced which they discharge with water. So they are contributing more water pollution, consumption of water and generation of the waste in form of sludge. So based on industry, we need to see what material topic for us and how we need to address that. Once we are clear with the material topic, then we need to set certain goals and the commitments. Because as a glass industry, the previous example, if we take, I understand my water consumption is on higher side. My sludge generation is on higher side. Now we need to think upon that how we can recycle the waste water and can again reuse the same in processing. Second, whatever the waste we are generating, is there any substitute or is there any option to make that waste again reuse in a process or again to make it as a particular product or maybe can use on a other aspect. So the one important aspect that has come from a study with respect to the glass industry, that whatever the sludge they are generating, it is again a glass, because waste kya hai unka? It is a glass particles. Just a minute. Just give me a minute. Yeah. Sorry. So we need to think upon that where that sludge can be used. So when the study was made, it is a particles of the glass. And when I'm talking about it is a particle of glass, so because of their natural properties, it is equal to the sand that we use in a construction industry. So if that sludge were mixed with the sand, it can be used as a good proposition or as a good composition when we are, creating a buildings. Similarly, these sludge can be used to make a bricks as well. Currently in India, if I talk about, there are no particular startup or industry who is somewhere collecting all these sludge, which is freely available from all these glass industries and to converting the same into a bricks. Why I am saying it is freely available and it is a very good opportunity. What is the best substitute of the plastic right now when I'm talking about environmental aspect? The best substitute which is coming in a market is a glass. And that is the reason glass industry is somewhere on a boom side, because most of the plastic products are, people are trying to replace it with glass. When I'm talking about renewable energy, so for that solar panel, I need again glass. And who will produce all these glass? From a glass industry. So the sludge generation will be on a higher side, and that is their concern in terms of the environmental aspect. how to dispose of that sludge. They are ready to pay amount if you are, collecting sludge from their organization. So think about, as a businessman, you will get the money to collect the sludge from all these glass industries. You just need to set up a small unit to convert these all sludge into a bricks. And by selling that bricks to the construction industries or a construction people, you can generate a business. So that type of the thought process we need to give with all industries. And accordingly, we need to set certain goals and commitment that how we are trying to achieve that target. Third important aspect is establishing system and the processes. Once I am clear as an industry, these are the material topic that I need to address. I am clear about my goals and the commitments. When I'm saying that goals and commitment, I should be clear with the timelines. Like, for example, if as a manufacturing industry, I wanted to reduce my electricity consumption from grid or non-renewable side, I also wanted to implement certain solar energy or wind energy aspect. So for that, I need to give a target that first of all, I want to reduce my energy consumption from non-renewable sources up to 50% by 2030 or a 2050 or a 2040, whatever the target you find it suitable. Second, you need to give a commitment that how you will replace that. So you should have a solution for the same, that we will move to the solar energy or we will move to the wind energy or maybe any other energy part. Many industry, they are using boiler. So that now boiler also we have a substitute. Agro-based boilers are available. So your old boiler you can replace with the agro-based boiler. So certain examples where commitment should be clear, timeline should be clear, and our thought process should be clear that what we want to achieve and how we want to achieve. Once all these part we are clear that how we want to achieve, then we can establish certain system and a process. And to establish that system and a process, here the internal audit role comes in a picture, where whatever the control metrics earlier we have made, whatever the controls based on that control metrics is being placed in a company, now that control metrics needs to be redesigned, considering the environmental aspect, considering the social aspect. Once you redesign your control metrics, accordingly controls will be changed. And once your controls are being changed, your whole internal audit process will change. Currently, whatever the internal audit reports we are producing to the businesses, it is only covering more or less financial aspect. We are not covering non-financial aspect, whereas non-financial reporting is an important part of our annual report. So on second and third area, our role will come as an internal audit. Fourth part, which is directly connected with us as an internal auditor, which is monitoring progress and communicating the performance. I am clear with what I want to achieve as a ESG part. Goals are clear, commitment are clear. Company is saying that by 2030, we will convert our non-renewable energy to a renewable energy by 20%, 30% or 40%. Now, who will track the progress? Obviously, company will track the progress, but external assurance is required, external review is required. So the internal audit role will come here, where you will monitor the progress, you will communicate the performance to the board. When you are monitoring the progress and communicating the performance, alignment with the ESG reporting framework is required, so that external assurance will rely on your report and they can make, frame an opinion for their non-financial reporting as well. And last part is report content development. Even for the industry, when they are starting their non-financial reporting for the first time, all these 5 steps are important. And in these 5 steps, internal audit roles is most important. As I said earlier as well, there are major frameworks which are available for ESGs, DRSR, GRI, IR, or a sustainable development goals, where we need to upgrade our knowledge, how these are important and how we can implement the same. So, Charvik, any query from a question answer box?
As of now, there are no queries as such. I have only 2 queries. From my side, if I can say, according to you, ESG is impacting almost all the aspects of business. Just
Yes.
additional question, whether investment or funding will be impacted due to these ESG laws? For
Yes, it is already being impacted. Reason, on February 28, 2024, RBI has issued a draft framework where they have instructed all Indian banks, national banks, to have a ESG analysis of their all loan files. And based on that ESG analysis, your rate will be decided in future. So the framework is already there. Banks are preparing themselves to review that. ESG credit ratings are already there. Banks will utilize that credit rating from different credit rating agencies, and accordingly your interest rate will be decided. So if you are not somewhere taking care of these ESG parameters, your rate will be on a higher side.
okay.
So
And
that is just only one example. Other example, government is also only promoting business which are sustainable in nature, and they are not promoting the business who are not sustainable in nature. So certain incentives like RIP subsidy, we already heard there are certain subsidies that government gives to the industry to establish their plants on a particular area. So now government will come with certain subsidies which is only for sustainable business. So if you are exploring your interest in a sustainable business, you will get certain subsidies, certain incentives from a government side.
okay. And is there any manual, industry-wise manual, where the companies can refer okay, what will impact their business more and what to take care of?
Okay, so for BRSR reporting, last year, NSE has taken an initiative where they made a 39 sector guide in terms of what they are expecting in terms of the non-financial reporting aspect. And that guide probably we can use that as an industry. Currently, what exchange is expecting, because whatever the exchange is expecting, it is SEBI something expecting as a good practice, and it is something which government is expecting. So that guideline probably we can use. If you talk about as a whole, any particular guideline, so that guideline right now we are not having. Government is working on that part, like social audit standard already being issued by ICAI. CSR rule 2021 was amended where impact assessment has been made compulsory for the CSR spent more than 1 CR. Similarly, framework we already have as a BRSR, because earlier there was a doubt how government is expecting a report. So now at least we have format, although we don't have any guideline or standard, but we have format where we can understand what government is expecting from us.
Okay. There are no further questions as of now.
So if I talk about internal audit of non-financial reporting, how normally it is start. So first of all, why it is important to have an internal audit of non-financial reporting. So demand of non-financial information is now being raised from a different stakeholders. Very simple example. As I said, if you want export order, they will ask you certain social compliances, certain environmental compliances. And that social compliances and environmental compliances you can present through your non-financial reporting. Whenever we are presenting all these non-financial reporting, whether they are relying directly on that information, answer is no. They always ask for the external confirmation. They always ask whether it is being audited or it is being reviewed by someone else or not. So first reason is that. Second, government aspect, regulatory aspect. So because of that aspect, now companies are regularly looking for the assurance provider who can give trust and a reliability of their information which they are producing as a non-financial data. So it's not a new term or not a new opportunity for all of us. It is something earlier also being demanded. Now it is being understood by us and the industry, where they are looking for the people who can provide assurance in terms of different aspects. Assurance doesn't mean only external insurance. It also includes your internal audit part. Internal audit is also a part of assurance. So they wanted someone to regularly review all these non-financial data, to regularly see whether the data they are collecting is authenticated or transparent, or somewhere improvement is being required. Just to give you a background, like when I talk about why it is important, so this is a BRSR core timeline for disclosure and assurance. So why a need of internal control and audit for the non-financial information? It is the reason. You can see that in financial year 23-24, top 1,000 company reporting of BRSR core KPI is mandatory. For 150 companies, their assurance of BRSR core KPI is mandatory. From next year onwards, 250 companies will be covered for the reasonable assurance, and also they need to cover their value chain disclosure. Most important aspect. For me, it is easy to clean my house, but it is very difficult to make my neighbor understand that why cleaning is important. So if you want to do a business with supply chain management or value chain, you need to make them understand, either follow the ESG part, otherwise we will not be able to do a business with you. Because for year 24-25, you have option comply or explain this part. But from next year, this comply or explain part is not available. So limited assurance for the value chain is required, where explain part they have removed. They wanted to understand that whatever the data you are producing for your supply chain management, for your value chain management, whether the limited assurance has been conducted or not. And you can see on a grid that from 26-27, it will be mandatory for top 1,000, including the reasonable assurance and value chain part for 250 companies. Now, when I'm saying the BRSR disclosure, so this is a very comprehensive slide where the fourth number part is important for us, which is assess if the appropriate control are in place to ensure reporting consistency. So how audit committee wanted to see a BRSR report? So it is a responsibility of audit committee. So it is a responsibility for audit committee to make sure whatever the data they are producing in their BRSR code, whether it is consistent, whether it is reliable, whether it is proper or not. And by this fourth option, you can see refer section 4 to clause number F to F7 of LODR. Because there are many organizations who are asking how board is responsible for that. Because many times board understand that we are responsible only for the financial data, whereas LODR making them reliable, making them responsible for the non-financial data as well in a different aspect. Where the first you can see understand how the entity is identifying a priority is the ESG risk. So this is again a board responsibility and an audit committee responsibility. Provide guidance on how entity communicate their ESG strategy or ESG story. So again, it is an audit committee responsibility that whatever the data they are producing as their ESG compliance, whether it is effective or not. So LODR compliance is there. Determine material information and impact on the financial reporting. And the fourth one, which is most important with respect to the internal audit, it is assess if appropriate controls are in place to ensure the reporting consistency. So this is the responsibility of the audit committee, and audit committee will ask company whether there are control for the non-financial reporting or not. If yes, who is testing these controls on a regular basis? Because current internal auditor is doing only for the financial reporting part. They are not covering a non-financial reporting. So integrated report, if I talk about, so in 2017 year, SEBI already issued a notification that they recommend to have an annual report in form of integrated report. Again, not a new aspect, very old one. In 2017, we already have a notification from a SEBI side, although not mandatory, but they recommended. So they recommend that whatever the annual report you are preparing, make it as per IR framework. What is the IR framework? And the circular that I have pasted in a chat box, in a presentation itself, the link of circular, where integrated reporting means you should integrate your non-financial reporting with your financial reporting. And how normally we see it as an integrated report? So it is including your capitals, 6 capitals, financial statement, management commentary, governance reports, environmental and a social impact, and a corporate communication. And how you include these 6 capital in your annual report. So these are the 6 capitals that we need to incorporate in our annual report, which includes financial capital, manufactured capital, intellectual capital, human capital, which is a part of your social aspect, social and a relationship capital, which is again part of your social aspect, and last and but not the least, natural capital, which is a part of your environmental aspect. And this is certain benefits of the integrated report. If you make your annual report as an integrated report, so it will improve the process of stakeholder engagement process, your business performance, and your reporting requirement with respect to short, medium, and long-term value creation. This is one of the examples. So I just taken L&T as an example. You see their 2021 report, they mentioned it as a full annual report. The name of the report is full annual report. Whereas for 21-22, they mentioned it as an integrated annual report. Reason, they have opted IR framework for their reporting aspect. Other example, ICICI Bank. If you see their 2018, so they mentioned their annual report, then business responsibility reports separately. Whereas if I go on 2019 year, they mentioned their annual report as an integrated report because they incorporated the IR framework within their annual report. And there are many companies who have already opted in for the integrated report. And to achieve that target, to make your annual report as an integrated report, there are certain requirements that we will discuss on a coming slide. This is again a very exhaustive slide, which first of all will give us the idea that as an internal auditor, what is our responsibilities, what is our core roles, what is something that we can consider as, to provide assurance or to make them understand. So with safeguard, but we need to understand that the orange part is not an easy one. If somewhere you are performing your internal audit function for the orange part, it is something very difficult. And as an internal auditor, you need to make sure that you have a sufficient documentation with you. The red part is which as an internal auditor, we should not take. So setting materiality level, it is not our criteria that what should be the material level for the company. It is company management estimate. Similarly, taking decision on the IR strategy, whether they should adopt a IR framework or not, it is not our part. We can only make them understand, but to give a assurance whether they should opt in or not, this is not our responsibility. Similarly, implementing the risk responses on the management behalf, not our role. It is something the management role that they need to take care. So this slide will give you insight that if someone is asking you to create an audit plan, internal audit plan, what you need to understand or you need to consider as your internal audit aspect and what you should avoid. So in terms of what we need to consider, we can provide assurance on the IR process. We can review the structure and the key information system of IR framework. We can provide assurance on the principles, like BRSR is having a 9 principles, so that assurance we can provide. We can evaluate the adequacy of governance and the risk management part or a control process. We will not include ourselves to design that controls. If you are including yourself to provide, designing that controls, then you will be eligible as per independence process for the internal audit process. We can review the key risks and opportunities. So that part we can take as an internal audit process. Now, what are the board responsibilities? So again, when I'm talking about ESG aspect here, this is something an overall slide that normally we discussed with respect to the risk and the KPIs for first step to meeting ESG requirement. And when we are discussing all these requirements, the point number 4 is important aspect where after understanding the requirement, after identifying the relevant stakeholders and the related ESG topics, and after developing an approach how to address the ESG reporting aspect, it is important for the company to design and deploy the internal controls over sustainability reporting. Because if it is not in place, it is very difficult to rely on the disclosure part or a reporting aspect which they are making as a part of their annual report. So the fourth part is here important, an opportunity for us where being having a knowledge of ESG aspect, we can contribute more on design or deploy internal controls. One, it is being designed and controls. What should be the internal audit criteria? What should be the internal audit process? What should be the frequency? And how reporting can be done, can be integrated within a existing internal audit report framework. Internal auditor, what will be our role in integrated reporting? So here, when I am again and again emphasizing the word integrated reporting, so integrated reporting is strongly only rely on the internal controls and the risk management system. It is a part of our annual report, which is a public document. And whatever the data which is a part of public document, it is somewhere important to have a strong internal control system. So whatever data you are producing, that should be objective, objectivity should be there, transparency should be there, data should be accurate, validity should be there. And it is not possible without having a strong internal control process and risk management process. So as an internal auditor, we need to see where we can help companies to improve both their technical part, which normally we call it as a hard part, and less tangible, which is soft control part. Ultimately, benefit will be to all stakeholders. The second important aspect is to have an alignment across the level with control framework. Now it is a high time to redesign all the business process. If I talk about purchase, sales, human resource, or name any of the particular process, just give you a small example of the purchase process. How ESG is impacting the purchase process. Currently, whenever you are conducting an internal audit of the purchase department, and when you are reviewing their vendor master or vendor appraisal form or a vendor introduction form, we normally see they have a criteria or they have a section where they ask whether the vendor is registered under MSME or not. We ask whether the vendor is having a GST registration number or not. Are we asking whether the vendor is ESG compliant or not? My answer is, in most of the cases, no. Our vendor introduction form, our vendor appraisal form is not appraising the vendor in terms of ESG compliance. Whereas the same listed company now needs to make a report that how much raw material sourcing it is being done from a sustainable sourcing partner. So for me, do we have a criteria? Do we have a segregation of our purchase that, okay, if from 100 CR purchase, my 50 CR purchase is from sustainable sourcing partner and 50 CR purchase is from non-sustainable sourcing partner. Currently, we are not having any system for the same. So that is the lag point where as an internal auditor, you will start, engaging the company that from your vendor introduction form, from your vendor appraisal form, start evaluating their performance on a ESG compliance part. So that you have a flag whether this partner, vendor's partner or a supply chain management partner is ESG compliance partner or a non-ESG compliance partner. Otherwise, that 250 criteria, how we will fulfill? हमारे पास data ही नहीं है अभी उसके लिए. Internal audit is one of the powerful facilitator for the same, because when as an internal auditor, you are regularly trying to see the ESG component in a different process, you will help a business to redesign the process. You will help the business to establish few controls. So integrated thinking is required, and that only can be done by the internal auditor. Why it is important? So financial data has always relied on the internal audit accuracy. I'm sure that you all always, whenever we sign any financial audit or any audit report, we always ask, where is the internal audit report? And there are certain threshold as well by Companies Act, where even for the private and limited companies, internal audit is required. Reason being, when your operation is on higher side, when you have a huge operation, it is not possible for any of the agency make sure in a 1 month time or a 15 days time to test the accuracy and the efficiency. And to meet that requirement, we have an internal control mechanism. So now, when the non-financial data is also equally important for the stakeholders, for government and regulators, to provide assurance on the same, to provide external assurance for the same, internal audit requirement will be there, because external assurance will only provide the assurance when internal audit report is there. So there are certain benefits, which is increase risk management, ensure the compliances, improve controls, enhance operational efficiency, and facilitate the informed decision making for the stakeholders. The compliance part, which I'm saying, currently we are not aware about many of the compliances, which as a statutory auditor also we need to take care. For example, EPR compliance, extended producer responsibility. So it is a compliance from a pollution control board side, where it is saying that whatever the plastic company is consuming, or maybe if they are a plastic production company or a importer of the plastic component, it is their responsibility to recycle the same. And if you are not able to recycle your plastic, then you need to buy a credit from the industry who are recycling the plastic. Now, the situation is, as a company, we all are the plastic consumers. At least for the brand, branding purpose, we use the plastic. Whatever the poly bags, whatever the packaging we are using, all these packaging are the plastic packaging, where we use our logo, company logo, and the point when we are using our company logo on that plastic packaging, it is our responsibility to recycle at the end of, when your product is developed. So now it's difficult for the company, because whomsoever I am selling my product and giving them my poly bag or a plastic polythene with the branding of the company, it is difficult to collect back that plastic to the company and to, recycling can be done. So government has make up mechanism that you don't need to recycle, or you need to something. We will give you target based on your plastic consumption, and that target you need to achieve by buying the EPR credit. So currently, the industries who are having, who are recycling the plastic, PET plastic or a plastic waste from a market, they are eligible to sell the credit as well to these companies who are consuming plastic or at various level. If you are buying any machinery from any other country, your import will not clear till the time you don't have a EPR certificate. So there are different categories: importer category, producer category, brand owner category, where you are using a plastic for your branding purpose, and then fourth category who are recycling the plastic. So that is a regular compliance. 31st October is the date for annual compliance, where you need to submit a certificate that we have, taken all these requirements or all these parameters taken care by the company. But being a statutory auditors, probably we are not aware about these requirements, because somewhere pollution control board is not in our criteria. However, you all know that as an internal auditor and as a statutory auditor, all regulatory compliance is in our responsibility. And being an internal auditor, it is more on us that how we are ensuring that company is taking care of all regulatory compliances. So now this is something that we need to check your own work first with the sustainability data and leading more reliable reporting and a potential reducing cost. Charvik sir, any query as of now?
No more queries as of now.
Okay. So what are the areas of the assurance where you can explore your interest with respect to the internal audit in a non-financial reporting aspect? So as an internal auditor, we can provide a wide range of the assurance for integrated thinking, first of all, which includes your operational issues, compliance issue, reputational issues, and most important, external stakeholder relationship. And materiality mainly for the non-financial information aspect. Here also we can work upon with the closely with the company and we can provide a assurance to them. Just as an example, a common example again. So Philips started their integrated report in 2008. Why they started very early? Why they started integrated report very early? Because they considered business strategy to be, aligned with their profit and sustainability at the same time. And in near future, they will give us, it will give us more fruits in terms of integrated reporting. So they started presenting their non-financial information with an integrated report card by showing that how it is important for them a sustainability into the business, to make it easier for the investors to understand that whatever the information they are expecting, it is available at the one place and that they can rely and they can make a comparison, and to save money obviously to combining the reports on a later stage. What are the benefits actually they have received? So faster reporting on the sustainability measures because they are having an integrated reporting mechanism. Stronger controls for their non-financial data because they started initially. So they started understanding initially that how it is important, how new controls is required at a place. So currently they are having a more stronger control data on a non-financial data. Increased employee engagement and a pride of Philips sustainability efforts. So when you go on their website, you will find this as a separate tab. And again, their website is more interactive, which is speaking more than their data in terms of their sustainability initiatives. Overall, their integrated report is giving a clear picture about their performance, how they are a reliable company. What is the importance of internal audit in terms of integrated? So same example we will take. Philips started in 2008. Initially, external auditor only given them a limited assurance on their sustainability data. Reason being, if someone is asking you as an auditor, will you provide a reasonable assurance to them? Just to clear, what is the difference between reasonable and a limited assurance? So reasonable assurance is we need to give assurance as a whole report. There is no exclusion. You cannot save your skin with respect to the responsibility of the data which you are reviewing, because you are providing a wider range of the assurance, which is the reasonable assurance. Limited assurance is type of the negative assurance, where we mention very specifically that this area we have not reviewed, and only these area we have reviewed, and it is only limited to the scope of work which is being assigned to us. So initially they only get a limited assurance because they were not having a strong internal control mechanism and auditor were not comfortable in providing a reasonable assurance. So to get a reasonable assurance on a later stage, it is important to have an internal audit mechanism within an organization. They implemented the same, run the same for 3 to 4 years, and then they move to the reasonable assurance. So now if I go on the Indian aspect, BRSR reporting aspect, where a previous slide was giving information, just a minute. That by year 26-27, for all top 1000 listed company, reasonable assurance is mandatory. So to get a reasonable assurance in 26-27, in current year, they need to establish the control mechanism, control metrics or control frameworks. And for that, they should have a MIS. Because if they don't have a MIS for non-financial information, for financial information, they have MIS. But for non-financial information, they don't have MIS. So that process should be there. Once they have, they start collecting information on a regular interval basis for their MIS purpose, they will understand that where a control is required, and they start making control process, control framework they start establishing. Next year will be the internal audit process. They will hire someone to test the reasonableness of their controls which they designed or deployed, and to suggest where the control improvement is required. That improvement will happen the next year, which is 25-26. And after that, company will be ready to get a reasonable assurance from an external assurance side based on their internal control mechanism. So That is the reason it has been most important and the correct time for the internal auditors to pitch the service with the industry, that it is the high time to deploy, design the internal controls for a non-financial reporting aspect. And this is the last slide from my side, very specifically. There are certain key questions whenever a client is coming to you, and you need to ask to understand that how much work we need to do in terms of the non-financial reporting internal audit. So few questions like you can ask, what are the existing governance, risk management and a control process which are leveraging the organization internal integrated reporting purpose? So first we need to ask them, is there any control that is being already exist or not? Does their integrated reporting cover the material activities? What are the material activities? What is the underlying process for the production of the integrated reporting adequacy? So I am sure you will find approximately 500 to 600 listed companies report which they claim it as an integrated report. Whereas the situation is entirely different. Whatever the information they are providing in an internal audit report, integrated reporting, even they are not sure that whatever data they are providing, whether it is accurate or not. Validity, accuracy is something which we need to see and understand what is the procedure for the same. Similarly, integrated reporting scope, we need to understand whether it is reliable or not. We need to understand what are the concept and the principle that we want to integrate, the key information which we need to understand in terms of the integrated reporting, the risk management, finance or sustainability function. So these are few questions. That is something where, in my mind, maybe there can be other question which you find suitable to ask if certain client is coming to you. So this is how probably I understand you can start your journey as an internal audit with respect to your non-financial aspect, non-integrated reporting aspect, where you can think about that this function is also expanding the wings for the non-financial reporting, for the integrated reporting. And as an internal auditor, now our responsibility is more than the financial reporting. It is more than the only financial aspect that earlier we were reviewing. Because as an internal auditor, what I understand, we are only focused on the operational losses or financial losses because of the lack of controls or because of the lack of system. But now our concern should be more than that. Now we need to think about non-financial reporting aspect, where our horizon we need to expand in terms of how we need to integrate the ESG with the integrated reporting as well as the business practice. So this is from my side. Any query from participant side or from organizer side, if you have, so that we can take right now.
There is one query, just a second.
Yeah, please, sir.
There is one query from CA CV Raghupati Rao. Should there be an ESG internal audit team? It should be different from the regular internal audit team. If yes, what should be the size of the ESG team?
So yes, it is different from the existing internal audit system that we are having for all the companies. The criteria, the scope of work, your testing, your approach, everything will be different. So first, like for as an example, I have given for the purchase department or a procurement department. So in that procurement department, now there will be a separate section where we will see and test how much sourcing is done from a sustainable sourcing partner. And when the company is claiming that this is the partner which is sustainable partner, for example, they will say that this 100 CR procurement is being done from a company X, which is a sustainable sourcing partner for us. You need to see that whether the claiming of that sustainable sourcing partner is true or not, because on that part only your reporting will be considered correct or incorrect. So complete procedure is different, reporting will be different, your scope of work will be different. It will cover all the departments, it will cover all the sections of the business, And based on that requirement, you will create your own internal audit scope of work for the ESG compliance. And based on the mutual understanding, you can start executing the same. Before that, you should have a risk control matrix for the same. And the first aspect that will come to you, that whether companies having, earlier we were working on ICFR. I hope we are aware about ICFR. It is internal control for financial reporting. Now we are need to ask about whether company is having ICNFR, whether company is having the internal control for non-financial reporting. So this is a major task that is waiting for us.
Okay. I think
So I hope, sir, probably a few inputs for your queries, that it is, yes, a complete different domain. Just to give you insight, no, like as a CA, when we talk about a financial statement, we have a whole soul domain. Compliances are there, accounting is there, regulations are there, reporting is there, everything is there. Similarly, now we have a non-financial reporting as well, where regulation is there, compliances is there, reporting is there, assurance is also there. It is coming slowly, slowly. So the similar opportunity that we experienced being a chartered accountant and a financial statement, from top to bottom, from starting with the accounting to end with the reporting and assurance, similar opportunities are in a non-financial reporting aspect, where an internal audit again has an important role to play. And without internal audit, it is very difficult to implement the ESG aspect.
there is one more question from CA Narayanan Ramaswamy. How does one identify a sustainable sourcing partner unless they have reporting obligations?
So the example which I have quoted in my slide, when you have a vendor introduction form or a vendor appraisal form, in that vendor introduction form, there should be certain questionnaires where you test their sustainability. For example, you can ask them whether your organization is being conducted for ESG due diligence or not. Like if any of the investment now coming from a Europe side or a US side, they are asking a ESG due diligence report with a financial due diligence report, just to see whether the compliance is being done or not. So similar aspect, like Mahindra and Mahindra, the company already in a place where whenever the vendor introduction is being introduced, they send their own representatives to see whether ESG compliance is there or not. Not just on the paper that, okay, we are doing this, we are doing this, we are doing this. They are sending their representative to the site where the representative are reviewing all these aspects and then giving a information, okay, this vendor is okay to introduce on the board, or otherwise not okay to introduce on a board. So certain questions can be added in a vendor introduction form. Certain queries can be added on an appraisal form, where you can ask certain things in terms of the ESG compliance.
One more query from CA Plavan Banerjee. What is the technical knowledge that is required for doing an ESG audit?
So, sir, currently you should be aware about, first of all, Indian ESG framework, which is BRSR framework, BIS framework also, which is again for a certification for the business side. Apart from that, you should be aware about other global reporting framework of the sustainability reporting, because there are many companies who are actually producing their report using their global reporting framework. So popular frameworks are GRI framework, the TCFD framework, IR framework, which is already being recommended by the SEBI. Then framework, CDP framework, SASB. Now the IFRS is also there. So S1, S2 will give you edge over others if you make yourself more comfortable, more knowledgeable with the requirement. So as a whole, globally, the requirement is there where people are looking for the professionals who understand the IFRS S1, S2. Just to give you a small example, I will not quote the name of agencies. So recently, one of the country was looking for the professionals who guide the ministry to make their CSR guidelines, similar guidelines that we have in India for industry, industries here. So they given that tender to one of the Big Four company in their country. The Big Four was not having a capability to develop that guidelines, so they sublet that engagement to other global organization, which is having a very good name. That global organization were not having that capability. So they sublet to the third organization, which is again globally renowned firm. They were also not having that capability. So they sublet fourth organization, which was the local organization in that country. And because of their staff contract constraint, they somewhere, sublet that particular engagement to us, where by sitting in India, we drafted the CSR guideline for the country. And initially, it was a very difficult task because we were having an instruction from via channel. 4 channels were there. So after that, we requested that, okay, please just give us one opportunity to interact with ministry. So we understand that what is the requirement, exactly what they are expecting. Because somewhere in CSR, they were incorporating ESG, sometime SDG, sometime ISO 26000. So we were not able to understand what exactly they wanted to have as a guideline. And we requested that we will present ourselves, whatever the organization name you will tell us. We will not tell ministry that we are the 5th partner of subletting. Then we get a first interaction, first and the last interaction. In that interaction, they only show us one document, which was our CSR guideline, Indian CSR guideline 2014 guideline. They just asked me one question, Harsha, have you seen this document earlier? Because of the restriction, I am not able to say that I am very much familiar with this document, because they were not aware that I am from India. So that I have not seen. We want just similar guideline for us. The 30 pages crisp guideline, where CSR should be integrated with SDG, ISO 26000, and the reporting framework of CSR should be integrated with the GRI reporting framework. This is the only aspect we are expecting in terms of the guidelines. I asked them, this is something that you only want, the document this I can refer. They said, yes, you can refer, because India is one of the country which is a benchmarking country for us in terms of CSR implementation. I said, okay, tomorrow you will get a document. Because for me, it was very easy to understand that CSR guideline, which they were thinking it is new for me. But we are already working for last 10 years for that. So just a night time I have given. 30 pages guideline we have submitted, and guideline was approved by the ministry. So overall global, what exactly is happening on an ESG part, you need to make yourself aware. There are different resources where you can make yourself comfortable, you are aware about what exactly is happening. Whatever the federation programs now being conducted, ESG is one of the prominent topic. Even whatever the national conferences are, international conferences are, being designed. All these conferences are having a regular topic of ESG. Even in many international conferences, more than half day or a 1 day they are giving to the ESG aspect. So just read about global reporting framework and everything, and you are good to go. There is no specific certification required for the same, because right now we are not having any kind of certification.
One more question from Sonali Patil. Which type of companies are liable to conduct this audit? Is there any threshold limit? I think you have answered, but we can just sum it up.
Yeah, currently SEBI has given this mandate to the board. You will decide who is the competent person to conduct an assurance for ESG reporting. It can be a chartered accountant, it can be a company secretary, it can be a CMA, it can be a graduate person, or maybe any other particular engineer. So now the ball is on board side. It is their responsibility to decide who will conduct an assurance. There is no mandate for a specific profession.
I think she's asking what type of companies are covered. I think you said top 250 or 500 companies. That part.
So for BRSR reporting, we already seen one particular slide where BRSR external assurance is required top 150 companies for current year. Next year it will be applicable for 250, then 500, and then 1000. So by 26-27 for top 1000 listed company, external assurance is must. And to get that external assurance, first internal audit of ESG reports is required. Later on, it is expected that it will be applicable for all listed companies, then it will come on the private limited companies as well, because SEBI already issued a notification to have a, we are having a two type of formats, DRSR. One is comprehensive, other one is your light version. So comprehensive is for listed company, light version is for private limited companies.
I think as of now, we are done with the questions. There are no more questions as of now. I am sure that people will analyze the first they will analyze the topic. It is a very difficult topic, and
Yeah, that I understand. It is a kind of new topic for everyone, but just to give you background, like all the senior chartered accountants whom normally we follow as a torch bearers, or the big companies, they all understand the importance of the topic. And what I have seen in last 2 years very specifically, that the senior chartered accountants who are already in practice for last 40 years or 45 years, they now given their practice to their succession planning as their kids or maybe any other partners, and they are focusing on this area to develop for their firm. And I'm very much impressed from these chartered accountants, because at the age of 60 or 65, they are somewhere looking for new learnings and trying to add something new for their firms. So the similar responsibility on us as well, being in an age of 30 or 40 or 50 years, we should explore this area more, because in next 5 years as a chartered accountant, if you ask me where is the opportunities, where is the more money you can earn, so this is something, an area where you can earn money globally as well without harming environment and a social aspect, equally contributing to the ESG aspect.
correct.
Yeah.
I think there's one more question from Mr. Banerjee. Can we get the copy of the presentation? I think it will be uploaded on the website of the institute, so you can directly.
Presentation I will share for sure with the board, and they will share with all the participants, or maybe the platform where you can access.
Correct.
And thank you so much for the feedbacks which I am getting from the participants. So again, a little bit environmental friendly option to get a feedback.
I think there are no more queries. So with your permission, we can wind it up.
Yeah, so I think we can wind up if you allow me, and I'm available for the other queries. As and when if you get from the participant, you can feel free to share with me on an email. We'll try to respond as soon as possible.
I'm sure you will receive a lot of emails.
No problem, sir. No problem for the same.
So to sum it up, first of all, I am CA Charuk Mumaya, and I would like to thank the board of internal audit and management accounting for providing me the pleasant task of proposing a hearty vote of thanks for our today's webinar and speaker, CA Harsha Ramnani. I am sure all the viewers will appreciate the fact that the today's speaker had rightly outlined the importance of ESG reporting, sustainability development, and the importance of government policies across all aspects of the business. She has also correctly stressed the importance of adding this sector in our day-to-day practice and grow our professional capabilities to a huge extent. Without any geographical boundaries, we can extend our practice. I am sure everybody will be waiting to hear again from Harsha madam, and I'm sure she will discuss in detail each and every topic discussed today. I would also like to propose a hearty vote of thanks again to our speaker, CA Harsha Ramnani. I would also like to thank Chairman and Vice Chairman of the board, CA Prakash and CA Priti Savla, for encouraging speakers on this platform, and also to the entire team for doing a lot of work and activities in the background, including technical support. Last but not the least, I would like to thank the participants for attending the webinar in large numbers and making it a very interactive session, and for their patient hearing. Again, thank you all for attending the webinar.
Thank you so much to the board and whole team, Prakash sir, Preeti ma'am. And yes, it is something new, but still they are very open for this new domain. Just they wanted to make sure that every member of the institute is aware about all these new requirements and the opportunities. So I appreciate the same. And thank you so much for providing me the platform and sharing my thoughts on the topic. Anytime, if any of the participant is expecting, wanted some guidance, so please feel free to share with the board. As and when they share with me, we will, we can discuss the same on a larger platform or anytime, further on a separate session. So thank you so much once again.
Thank you once again, and I think we can close the session.